Let's take a journey back in time to explore the origin story of one of the most revolutionary inventions of the 21st century, Bitcoin. It didn't emerge out of nowhere. It was born from a perfect storm of technological innovation, a passionate community, and a moment of global financial crisis. Understanding Bitcoin's history is crucial because it reveals its core purpose and why it was designed the way it was. It's a story of an anonymous creator, a groundbreaking idea, and the rise of a new financial paradigm. Before Bitcoin, there were decades of attempts to create a form of digital cash. In the 1980s and 90s, a group of cryptographers and computer scientists known as the cypherpunks were passionately exploring the idea of using cryptography to protect individual privacy and freedom in a digital world. They envisioned a world where transactions could be conducted without the need for a trusted third party like a bank. Pioneering concepts like Hashcash by Adam Back and Bitgold by Nick Szabo laid the intellectual groundwork. These systems grappled with the problem of double spending, a flaw that had plagued all previous attempts at creating digital money. The problem was simple. How do you prevent someone from spending the same digital token twice? Solving this was the key to creating a truly functional peer-to-peer electronic cash system. The financial crisis of 2008 was the final catalyst. Banks were bailed out by governments and the world lost faith in centralized financial institutions. It was against this backdrop that the Bitcoin white paper appeared. On October 31st, 2008, a person or group using the pseudonym Satoshi Nakamoto published a 9-page document titled Bitcoin, a peer-to-peer electronic cash system. The paper brilliantly outlined a solution to the double spending problem using a new technology called a blockchain and a cryptographic concept called proof of work. The brilliance of Bitcoin was not in a single new invention, but in the elegant combination of existing ideas to create something entirely new, a decentralized immutable digital ledger. A little over 2 months later, on January 3rd, 2009, Satoshi Nakamoto mined the very first block of the Bitcoin blockchain, a moment known as the Genesis block. Embedded within the block was a message, the Times 03/Jan/2009, Chancellor on brink of second bailout for banks. This message served as a timestamp, proving the block was mined on that day and as a powerful anti-establishment statement on the very reason for Bitcoin's existence. In the beginning, Bitcoin was only known to a small group of cypherpunks and developers. It had no monetary value. It was a fascinating experiment in a peer-to-peer network. On January 12, 2009, Satoshi Nakamoto sent 10 Bitcoins to a developer named Hal Finney, the first person to download the Bitcoin software. This historic transaction proved the system worked. Finney, an influential cryptographer, was a key figure in the early community, and his running Bitcoin tweet is now a legendary part of the lore. The most famous transaction in Bitcoin history occurred on May 22, 2010. A programmer named Laszlo Hajnesz paid 10,000 Bitcoin for 2 pizzas. At the time, those Bitcoins were worth about $41. Today, that amount would be worth hundreds of millions of dollars. This event, now celebrated annually as Bitcoin Pizza Day, marked the first time Bitcoin was used for a real-world commercial transaction. The years that followed were a roller coaster of growth, challenges, and the milestones that shaped Bitcoin into the asset it is today. The first parity and the first halving. By early 2011, Bitcoin reached $1, a significant psychological milestone. This led to its first major price rally, peaking at around $30 before crashing back down. In November 2012, the first halving occurred, cutting the block reward from 50 Bitcoin to 25 Bitcoin. This was the first test of Bitcoin's programmed scarcity model, and its success paved the way for future price appreciation. Bitcoin's price skyrocketed again in 2013, reaching over $1,000. This attracted a wave of mainstream attention, but also brought a major catastrophe. The largest Bitcoin exchange in the world was hacked. The loss of 850,000 Bitcoins led to its bankruptcy and a multi-year bear market, which served as a painful but vital lesson about the risks of centralized exchanges. The second halving in 2016 was a quieter affair, but the following year saw one of the most explosive bull runs in history. with Bitcoin's price soaring from under $1,000 to nearly $20,000. This brought in a new wave of investors and solidified Bitcoin's status as a major financial asset. The third halving in 2020 was followed by a bull run fueled by a new, powerful force: institutional adoption. Companies like MicroStrategy and investment funds like Fidelity began to legitimize Bitcoin, bringing with them a massive influx of capital. The price reached an all-time high of over $69,000, and countries like El Salvador even adopted it as a legal tender. One of the most profound aspects of Bitcoin's history is the disappearance of its creator. In 2011, Satoshi Nakamoto sent a final email to a developer, stating they had moved on to other things. Since then, the identity of Satoshi has remained one of the greatest mysteries of the digital age. This anonymity is not a bug, it's a feature. By stepping away, Satoshi ensured that Bitcoin would be a truly decentralized without a single leader or central authority that could be controlled or corrupted. The project was left to the community, to the math, and to the code. This lack of central figure is arguably Bitcoin's greatest strength and the ultimate embodiment of its core principles. The history of Bitcoin is still being written, but its past has already cemented its place as a groundbreaking innovation born from the desire for a more transparent, secure, and independent financial system. If you enjoyed this video and you want more videos about Bitcoin, breaking it down, about Bitcoin investing, and more tips about Bitcoin, make sure to subscribe to the channel. Thank you for watching, and I will see you in the next one.